I'm David Liggett with Data Center Hawk. I'm here with Anthony Bolner, Executive Vice President and Partner with Stream Data Centers, and we're talking about the data center industry next. All right, Mr. Bolner, welcome.
Thank you.
Thank you very much to our video blog here at Data Center Hawk. We're super excited to have you, and what we're doing is really talking about the industry and a lot of the trends that are taking place in the market today. And so I want to dive in, but for the people that might not know of your legendary status in the industry, as well as about Stream Data Centers, give a brief overview of what you all are doing today and how you serve the industry.
Well, legendary status might be a bit overstated, David.
I don't know about that.
But appreciate the intro. So Stream Data Centers is based in Dallas, Texas, and we are a developer, owner, and operator of data center space. And we have a variety of projects in several different markets. Stream Data Centers really got our start in 1998 as an investor in the data center space. As we have learned more about it, we have become not only an investor and owner, but also a developer and operator of what we might call outsourced data center space.
Yeah.
And 5 years ago, outsourced data center space meant enterprise users taking data center space off of their campuses and into an outsourced model, which obviously we refer to as co-location space.
Yeah.
But today, we're seeing, obviously, with the growth of the cloud, really a whole new demand for data center space, which has kind of become to be called hyper growth companies.
Yeah. Okay. So talk to everyone about how almost the evolution of this, because I think there's a lot of and this from a real estate side of things, there's a lot of developers that were very good real estate developers that got into the data center industry by investing, by buying facilities, probably 15, 20 years ago. And then all of a sudden, as the market changed, they changed with the market.
Right.
And so talk about that change over the last 15 years and how it's changed what you all have done and what you're delivering to the market today.
Sure. So a lot of the fundamentals of the data center industry are based on real estate, because it really is kind of a specialized sector or specialized class within within real estate use.
Yeah.
And of course, that specialty is developing and operating buildings that are really purpose built, to serve the needs of servers.
Yeah, sure, you bet.
But what we have seen.
And now hold on, and on that too, I would say it's one of the reasons that understanding the market can be hard for the traditional real estate, professional, because, and especially on the commercial side, because real estate is square footage, and that's how things sell. Well, in the data center industry, it's power, it's infrastructure, and so it's a completely different approach that's housed obviously in hardened facilities and things like that. And so that's one of the things that is sometimes a challenge for people in the industry to really get their arms around, is basically like the size of markets being in power and not square footage.
Absolutely, and that is a fundamental difference.
Yeah.
And every time we work on a requirement, we are always referring to the kilowatt or the megawatts,
Sure. Yep.
and as opposed to square footage, which is the typical metric in our in real estate. So.
So when the companies were buying, 10, 15 years ago, companies were buying data centers on their own. They were owning them themselves. And then over time, that started to change. And the way that I think the maturity in the market got better. I think data center operators started, became more mature, listened to what users were wanting. But talk about the evolution there and how that changed.
So I think one of the very first key points was 9/11, 2001. Mm-hmm. So at that point, the whole industry kind of had went through a very quick evolution, because the whole idea of disaster recovery and the need for a secondary data center, typically off-site, was, and it really started with a lot of the big banks who had regulatory issues and had to create redundancy in their infrastructure plan. So what we saw in the very early 2000s, all the way through kind of 04, 05, were large banks and other financial institutions and other healthcare companies and insurance companies, et cetera, oil and gas, who were following this same sort of approach and either building or leasing a secondary or even a network of data centers off-site. So that was really the beginning of this outsourced kind of data center industry that now I would call 10 to 12 years old.
Yeah.
And of course, we had some very early REITs in that industry.
Yep.
That are still in it today. But I think if you look at the number of REITs and outsourced providers 10 years ago versus today, 10 years ago it might have been 2, and today it's 15 to 20.
Yeah, well, and I think that like the capital markets, kind of the crash in 08, 09 had a huge impact on how things changed when you consider companies traditionally had used their own capital to go and do these deals themselves. 08, 09 hits, the capital markets dry up. There's not as much capital for a company to do it themselves. They start to look to data center operators to do it. And I think that the evolution of those providers and the way they had grown and the need now from the data center users themselves now is like kind of like the perfect storm to grow the industry.
Absolutely.
And then I would just say that when 5 years later, when some of those companies had the opportunity to leave, they said, no, we like the service we're getting, and that really grew from there.
No question. And maybe the easiest perspective, I don't know if it's easy, but a perspective to look at is the perspective of the CFO within a Fortune 500 company, and the perspective of the CIO. Yeah. So the CFO back in 2010, 2011, everyone was very careful with their capital dollars. To your point, and the CFO was saying, I'm not going to spend $200 million on a data center. Go find one, even though we've owned these historically, go find one we can lease. Yeah, go find a better solution. Absolutely, and that really was increased massively between 2010 and call it 2015. And during that time, the CIO, who was always responsible for the integrity of their infrastructure, the integrity of their data, has always been the governor to that. Yeah. But in a lot of ways, driven that outsourcing. Now, really, since 2015, I mean, we've talked a lot about the growth of the cloud, and if we dug in to the growth of the cloud, really from 2013 to 2017, I mean, the growth of the cloud has more than doubled each year in that just 4-year time period. Sure. So I think, once again, you're looking at the CFO who's putting pressure on the CIO to find ways to not spend capital and even, look for, let's call it, because I don't think it's less money, I think it's just more flexible spending. Sure. So with that, the CIO is now having to evaluate the cloud as an option. And what can we put into the cloud? And you're seeing like hybrid IT take off because of that. I think you're seeing companies really try and transform their IT infrastructure. We were at a lunch a couple weeks ago where there was a CIO talking specifically about how she was working to change the way their company had operated, not only their infrastructure, but their people, their development teams, with agile development, things like that. So there's definitely a transformation taking place, and within that transformation, they are looking to the third-party providers to help source and be the recipients of those. Really. Support that need. Yes, you bet. And that's really where we find ourselves. We are supporting the needs, and I'd kind of put it into two big silos: the enterprise user and the cloud providers. And cloud providers sometimes are called CSP, cloud service providers. Sometimes you hear them referred to as hyperscale, which just really means, very large, fast-growing requirements.
So if you think about on the enterprise side, definitely large requirements, but kind of in one range. And then you think of the hyperscale type deals in the bigger range. I mean, the hyperscale stuff is really what's changed the co-location industry.
No question.
And has, since really 2014, 2015, has transformed the way that data center operators are really looking to grow in markets across the U.S. and across the world. So one of the things you all have done, y'all are in, so Stream is in Dallas, Houston, San Antonio, Minneapolis. You all have also bought data centers and sold them in different markets over time.
Right.
But those are your 4 areas. But talk to us about those geographies, just where you all are in general, but then also talk about how other data center operators and maybe the industry is looking at the market and looking at certain geographies.
Sure. So you can look at the markets we're in today, and we have been in those markets, frankly, since 2012, 2013.
Sure. For a while, yeah.
And each of those markets really were selected because we saw them as strong enterprise markets. They had a good base of Fortune 500 companies.
Sure.
We're also very, we track supply and demand, so we saw opportunity in those markets, et cetera. Now, I think with the growth of the cloud, it's no secret, but I think ourselves and a lot of other really key providers are looking at what we would define as the key cloud markets.
Yeah.
And that's that's a fairly short list.
Yeah.
I mean, there's probably 10 cities on that list right now. I'm just talking about in North America, and there's probably another 10 international.
Yeah, sure.
But the cloud growth right now seems to be in certain major markets.
Yeah, and I think that's one of the really interesting things too that shifted the co-location industry, which was, co-location providers were not traditionally building in rural areas where companies were that were going to own and operate their own data centers would take advantage of kind of economies of scale, low power cost, tax incentive opportunities, in different areas, rural North Carolina, Omaha, Iowa, those type of areas. When the demand started coming to major markets, Chicago, Dallas, Northern Virginia, Silicon Valley, Phoenix, those markets were in a position to really grow. And I think that has been the game changer. Like, our 3Q 2017 Northern Virginia growth is really where most of the growth in the data center industry in the United States happened in the third quarter. And a lot of that is because of the investment that has been made in the connectivity infrastructure there, in the, obviously the power infrastructure. And you have a very competitive set of data center operators that are delivering massive,
very large
facility.
scale.
It's the only place, I feel like it's the only place maybe in the world where you can stand on a corner and point out, there's data center, there's data center. It is, what's happening like in an Ashburn is different than what's happening in other markets. It's just so much bigger. Same general needs, but just bigger in that market. Right. So, as you think about the main markets from your perspective, where are some of the ones that you think, besides Northern Virginia, demand is being seen today?
Sure, and you've touched on, Silicon Valley, Phoenix, Chicago, Dallas, key market, no question, and growing significantly. But Northern Virginia is the largest market in the industry, no question. And I think, success kind of begets success. Yep. So many significant providers there have had successful projects and just continue to build kind of their next phase. And I actually, and this is a discussion we got into a week or so ago, does supply create absorption, or does absorption drive supply? And right now...
You got an answer for that?
No, but right now it kind of seems like supply is driving absorption. Sure. And that would lead you to believe that, a lot of these hyperscale users already have a significant footprint into the 5 or 6 key markets that we've primarily thrown out already. And so when product becomes available in one of those markets, they already have their connectivity infrastructure in place. They already understand maybe the incentives and the cost of power and the, call it the cost of occupancy in that market. So they're able to, oh good, here's another large chunk of space available in Silicon Valley. We'll make a commitment to that because we know what we're getting. So much of that has landed in Northern Virginia that market has just kept growing. But I think the lack of supply in Silicon Valley, the lack of supply even in a Chicago and a Dallas has somewhat hindered the absorption rate in those markets. I think we're going to see that change in the next even 6 months, 12 months, 18 months. But tracking supply to date has been a way to track absorption.
So when you all started developing data centers, and even when some of the larger REITs did, what they were building was kind of set for a certain type of user. And one of the things that I've certainly, and I think us in the industry have seen change, is the importance of connectivity. And how users wanting access to different, fiber providers, wanting access to different cloud providers, has created almost a rising level of importance on this, and the way that data center operators deliver solutions that allow them to have a wide variety of connectivity options. How are you seeing that change, like what you all do and what others do? Is that on your radar? Are you thinking about how we're adding these services to our offering?
We are. Connectivity, I think, is one of them.
Okay.
I think a flexible approach to connectivity. I mean, connectivity is more is better. So more carriers, more routes into a project or a site, more types of connectivity. So it's not just the number of carriers, but it's the ability to bring in dark fiber and maybe even dark fiber from more than one provider. So connectivity is absolutely key, but it's one that we just need to position the site and the project to have plenty of possibilities for the end user. The other things, and you can call them services or you can call them attributes, but things like the ability to scale and the flexibility of design, and even the timing, time to market. All of those things are very critical and very important right now.
So if you think about, obviously where the industry's been, where we are today, so the future, what do you think will have the biggest impact on the industry, in the next few years? I mean, what are going to be the things that will, directly impact, data center users, providers, the investor community? I mean, what are some of those things that should be on the radar of people in the industry today?
Well, I mean, this is,
crystal ball.
Crystal ball. I mean, no. I mean, it's. I mean, to us, it all goes back to supply and demand. And we have to have demand in order to support supply. So what's driving demand? Demand is, I mean, if we all believe the internet will continue growing at the rate that it's growing, and if you believe in artificial intelligence, and if you believe in Internet of Things, and you believe in, if you believe that every written blog will now become a video blog like this,
which is happening right in front of your eyes.
But the fact that we were all fine. We've gone from email to photos to now videos, and just the amount of storage, that all continues to drive. I mean, that's grossly oversimplified, but if you believe in the growth of internet, you believe in the demand for data center space, and I think we all believe in that for the foreseeable future.
Well, and if you think about the way businesses are using IT infrastructure. They're using technology to continually increase opportunities, uncover new opportunities. So being able to really see things that they couldn't before because of what technology allows them to do.
Right.
That's just from a business side. You think, the personal side and the way people are using, different apps and phones and things like that, the growth there seems obviously will continue for a long time. But when you put those two things together, obviously it seems like the data center industry and the growth there will continue. At what rate? Obviously that's one of the questions I think all of those in the industry are wanting to understand. But it does feel like the business is in good position to handle the growth moving forward. I think it speaks a lot to, in my opinion, the data center operator industry shifting the product, shifting the facility. I think I talk about this a lot, but I think 5 years ago, the operator community would say, hey, this is how you build, this is what we make, we do it the best, and so if you don't do it our way, it's wrong.
Right.
And I think it has shifted to say, hey, this is how we do it. We think, we've got some experience doing this,
right,
but we want to bring this to the table and see if we can come up with a solution that works best for you.
Right.
And I think that has allowed them to really, has allowed the data center operator community as a whole to really be in a position to handle a lot of these bigger deals that have gone on, and also be able to handle the hybrid approach that some smaller companies need to take.
A stat that we heard at a conference a week or so ago was that 65% of corporate data still sits in on-prem corporate data centers, which that was almost surprising to me. I mean, we talked earlier about this, outsourcing of the data center that started in 04 and 05, which was more than 10 years ago, and the fact that 65% of enterprise or corporate data is still sitting in a enterprise controlled data center. It kind of shows you how much continued growth and run this this industry has in it. And I remember the analyst who said that, and he even went so far as to say that he kind of expects that number to lessen by 5% per year. Well, my gosh, I mean, we're trying to look into the crystal ball and say, how what inning are we in, and how far will this continue? Well, even if you chip away at that 5% a year, you can still see easily 5 to 7 years, because I think these CIOs they're all working to figure out, what can I take off prem? And
it's not easy.
No.
Yeah, I mean, number one, it's not easy to figuring it out is hard, and I think companies have gotten better at that, but it takes time. It takes talented team members to figure it out. Then it takes a while to put together a solution. Then you got to get them to your company to buy into it. You got to prove it up and then go execute. And those things happening, it takes time and it takes expertise. And so I think that's one of the challenges all companies face, is continually thinking through their strategy. And a lot of times, by the time a company has made a decision on what to do, the market's moved to an extent, and there might be a better solution out there. So, which goes back to your point of providing flexible solutions and being flexible with the end users themselves, because that is what companies are wanting over the long term. Okay, so let's talk this. You, not many people know this, but you have kind of I don't even know what I would call it.
Hobby.
Yeah, a hobby. Talk about how you got into that hobby, or what the hobby is and how you got into it.
So Liggett is referring to that outside of my data center career, I am involved in a very small burger business in
the greatest burger place
in the Dallas area, and it's called Shady's Burgers and Brouhaha, but anyway, that's just a fun little thing that I did with a few neighbors about 3 or 4 years ago, and it's a hobby.
It's a good spot. The Liggett kids will find themselves there and having a good time. Well, hey, thanks. This has been awesome. Loved having you do this, and excited to see where Stream goes in the future. And thanks for watching, and you'll see more in the future. Stay tuned.